Now, all right, everybody. So it is March 21st, and the world just got turned upside down. So we're going to wait maybe just a couple minutes to see how many people roll into the webinar here before we begin. Andrew, you looks like you know how to use Zoom. So if you need to chime in and ask any questions, feel free to do so.
Cool.
Yep, it's good to see you. How you been?
Doing well. Just staying out of the crowd.
Yeah.
Social
Yeah. Are you
distancing.
still doing deals?
Working on it.
Working on the deals. Yeah.
Mm-hmm.
Are you sticking with the same strategies, or are you kind of pivoting?
Still just doing the same, really. Sending text message and cold call people. I think right now
Still
is
working
probably
it. Still
Nice.
working it.
Okay. Have you found that your buyers are maybe backing out a little bit more so right now?
Yes, they're a little bit hesitant about moving forward with the deals. Sometimes, like if you have a tenant unit and they're the tenant is a little bit hesitant about showing the house, so they're kind of waiting it out to until this thing is passed and you know can show the house.
Yeah, that's an interesting thought. I hadn't. Showing houses might be harder if they're occupied now because people don't want people in their house. It makes sense. Yeah.
Yeah. Mm-hmm. Right.
Yeah. Looks like we got somebody else who's joining. Can you hear or see us? Yeah, somebody's out there.
One of my peeps.
Yeah, I'm gonna mute
So
him.
we have 8 people on here right now, outside of us.
Okay. Well, then we'll keep going. Okay, so this is Paul Thompson. If you haven't already met before, full-time real estate investor in Little Rock, Arkansas, and I have Cody and Chris on here as well. They're business partners of mine in a kind of our little venture called KCP, and we are active real estate investors in this market, and we're trying to figure out exactly what to do in the circumstances that we've all suddenly found ourselves in. The world has just been turned upside down in the last 10 days, and we just thought it'd be a good idea to get together and talk to other real estate investors about how to mitigate the nuances of what's happened to us. Like, what I know you have a ton of questions. So if anybody is on here and can find the chat in Zoom, go ahead and type in the chat and say your name and where you're from. I'll see if I can type it, everybody. To all panelists, and hello, find the chat. There you go. Find the chat. Brian from Fargo. Good to see you.
Fargo. Nice.
Yeah. Anybody else is out there, go ahead and say your name, where you're from, and also what are your questions about what's happening in the market? Like, how does this affect you? So we have Adam from Waycross. I talked to him just a few days ago. John from Sacramento. And what are your questions right now? Like in the light of what's happened, what are some questions that you want to solve? Mark Wintermoot from Ontario, Canada. Paul from DC. Welcome, everybody. What are your questions about what do you want to, like, I can't say we're the sages and have all the answers, but you're bound to have questions. So let's see if we can help each other answer them. So while you're putting that out there, the questions or the agenda that we had in mind for tonight was, and we'll go for 60 minutes or longer if we need to, but here are the thoughts that we thought we would cover. First off was to discuss how long this is going to last. I think the short answer is we don't know, but we're going to talk about that a little more. Second is discuss what to do as a landlord. If you own rental property and you expecting rent come due in April, what's your plan? And so John says, how do we market? How do we be sensitive about what's happening and still market? Okay, interesting. And Mark wants to know, how confident am I feeling? And Jeremiah's in town as well. Welcome. And then the last major topic we're going to cover is discuss what to do as an investor. Like, if you're actively looking to buy property, actively lending, if you're actively involved in the real estate market, what strategies might change. So let's go ahead and jump into the conversation and discuss how long this will last. So I mean, we don't know. Cody or Chris, do you have a glass ball that tells you exactly a silver?
Not a chance.
Yeah, me either. But what I think I will say is it's going to be longer than shorter. It is not going to be a 2 or 3 week event where we're all doing social distancing, and then in the middle of April, things are going to clear up. We've seen from China that it took them a good 3 months to not have a single new case, and they took extreme measures to keep this in check. I think we can expect similar growth patterns everywhere else. What we've seen from Italy is this is going to last for a while. I don't think our kids in the U.S. are going back to school this year. As it stands right now, there are many places who have canceled school through April. Locally here, they've canceled it through April 17th officially, and I'm just not sure we're going back at all this year. So that means there's going to be a lot of people that are being forced to stay in, and it's going to affect people's jobs. So it's going to be long, but will it be 3 or 6 months? I don't know. And I think the problem is we're all spending all the time focused in day by day on what's happening. And while we want to make sure we can cover our bills in the short term, in the long term, this is not going to be as big of a deal as we might be thinking it is right now, because we're looking back. We'll have the benefit of looking back at history, and this will be a very interesting, eventful, scary spike in history, but it will pass. And keep that in mind. We all survived 2008. It was not fun. Some people may have been terribly affected, but you made it through it. We're going to make it through this as well. And this is just the time to figure out how to mitigate it while we're in the middle of it. Okay, so Cody is going to be kind of running some of the questions on some of this.
Paul's question. You always hear the real estate market move slower than the stock market and economy in general.
Mm-hmm.
Do you think that the current state of the real estate market will move quicker than what we're seeing, what we see historically, turn to a buyer's market quickly? I personally believe in the Little Rock area, when things get like they are now, I believe we've turned to a buyer's market pretty quick. And I think we'll start seeing that more and more apparent over time in the coming 30, 60, 90 days.
And I think I would agree with that in the short term, like it's been 10 days since it really hit my radar. I mean, like my kids didn't get out of school until last Friday, I think. So we just don't know how long it's going to last. But what I would say is that it's still going to be slower than the market, because the stock market. Because the stock market, we already know is crashed. There will be a lagging effect in the real estate market, and that will be unique to your area. You're in DC, Paul Dietrich. It might be a completely different conversation there versus in where we are in Little Rock. I don't know which one would be faster, but overall there will be a switch to a buyer's market simply because the overall economy is going to suffer because people don't have incomes and the stock market is down.
Yeah, and I think there's going to be a distinction in those who are cash heavy and can weather the storm a little bit more. Those are the people that can take full advantage, I believe, to buying the right deals right now. They're always going to be coming up, and if you're doing what we're doing, marketing for them strategically, if we're in that position to be cash heavy and take them down, then that's where there's going to be a separation of those who are and aren't.
I think that's a really good point that I think we'll discuss maybe in a little more detail. We're talking about as an investor, kind of where your stance is here. But what's interesting is the economic force that is causing this is the fact that so many people are being forced to stay home and companies aren't as efficient. But what is the underlying drag on the market, on the real estate market? Much of it is just the uncertainty, but the actual mechanics are still there. People still need a place to live. Fundamentally, people will still have jobs, but it's just how many. So I think there's an estimate that on the high end, there's been an estimate that as much as the unemployment rate may go up to, it may spike for a while up to 20%, and that it will probably disproportionately hit people who are renters more than people who are homeowners. but we don't know exactly how much. So you will face a time, if you're a renter or a landlord, where you have renters that can't pay, or that legitimately good renters who just don't have the income anymore and can't pay. And we'll discuss that maybe a little bit more here in a minute. So 45 to 65% of people this is the estimate that I've read, 45 to 65% of the people on Earth probably will get this virus over the next 18 to 24 months. So it is going to be an extended experience for that. I think unprecedented. Maybe the only other the only corollary that we really have to measure is the 1918 flu, which thankfully the coronavirus isn't as deadly as the Spanish flu. But overall, I think it's time to brace for I'm not sure if I'd call it a recession, but it was definitely a significant change in our economy. So I think maybe it's a good time to switch into what to do as a landlord overall. And it fundamentally, I think, boils down to mitigation. And I think there's like 3 basic things you need to do. You need to start communicating. You need to communicate to your property managers if you have them, communicate to your banks on what kind of forbearance policies they might have, and then go and talk to your tenants proactively and figure out if they're going to be affected now. Because if somebody's already affected in April, then they have no cash reserves, and they're going to be in a situation where they're going to not be able to make payments for potentially 3 months, for example. I'm not sure. And having those conversations. You want to say something, Chris?
Yeah. One thing I was going to say is, those people that are being laid off, I'm seeing like, was it grocery stores? Some other places are hiring for people to stock shelves, and they're paying like $16 an hour or whatever it is. But, there's a different demand now for a different type of job. So if your tenants are losing jobs, I mean, there's still a market for jobs out there. It's just a matter of pivoting.
It's different. Yeah. So encourage them to change. Yeah.
Yeah. Well, yeah, it's like, you got to take care of yourself. We want to work with you. Have you looked into other options, but being, willing to work with them to some degree.
Yeah. And speaking of working with them, let's kind of quantify what we think that policy is. I think what we want to do is actually create a policy and not wait until somebody calls you up on April 1st or 2nd and says, oh, by the way, I can't pay. And then you're suddenly on the phone call having to make a decision over the phone. That's not when you want to be thinking these things through. So overall, I would communicate to renters that you're sensitive to what's going on, and that you'll continue to maintain the property so long as it has legitimate needs. But you will be careful about not necessarily sending people in their house unnecessarily. 2, that rent is due, is still expected for you to pay your rent. And 3rd, if you are having trouble, here are some community resources. And I did a little research on some different locations out there that you can take a look at. And for example, findhelp.org is a good resource. Cody, let's see if can you type those into the chat log? Findhelp.org. The other one is needhelppayingbills.com. Need help paying bills. I think that's right. Yeah. And then the unitedway.org/local, and you can look up what some United Way policies are. And there's like food pantries and whatnot. And Find Help is a really good place that just kind of captures all of that for each local community. You put in your zip code and it finds all these local communities for housing, food, et cetera, shelters, whatever. And the food pantries in your area. And basically, these are resources that you can help your tenants use if they need them and they're truly in dire straits, where they're really living that close to their money. They're living hand to mouth, paycheck to paycheck. They're not going to be able to afford not getting a paycheck. And you want to find out about that now if they're not going to be able to pay, and help them get, encourage them to work with their family, work with their local communities, the church if they're part of it. And these public resources, findhelp.org and the United Way, to figure out if there's some sort of government assistance or local assistance, if they can help kind of bridge the gap, because a lot of this is going to be bridging the gap for the next 3 months is what I think.
We have a question here from Brian. With a crisis and economically similar to the Great Recession, Great Depression, or somewhere in between, what is your opinion on that?
Speculation is all I can say. We don't know.
I would say
And
it's unique. Like
yeah,
it's a unique one because it's, in the recession we had, the stock market crash, but we didn't, well, and maybe we did see the unemployment as high, perhaps as high as we think it will go. But I think how fast it occurred, like I would say we are actively in a recession as we speak now. Right. And I think that's something we all need to acknowledge. But how will it end? I don't know. I think it is unique, though. I think it might create different types of jobs. It might create different types of industries. I do think there's going to be a lot of innovation during this time, because people are going to have to get crafty and
get
working from,
crafty.
yeah,
I like that.
working from home. When people have a lot of time to think, they start to create things. So
Yeah, it's an interesting question. To basically the underlying question is like, to how deep will this cut be? And the fundamental difference between this and the two crises that you mentioned is that there was an underlying financial reason that those were created. This was created by something outside the financial markets. So if we're able to weather the storm, then the economy has a better chance of recovering after we don't have to social distance and people go back to work more consistently. So I think the fundamental concern is, are you personally going to be able to weather it? And whether or not it's the Great Recession or the Great Depression, somewhat is semantics. On a personal investor level, what can you do to adjust? I mean, that's all what it boils down to. Is we are small mom and pop type investors, and we are much more nimble than the big companies are. Big companies are going to have trouble pivoting, is the word Chris used before, and I think it's perfect. We're going to have to adapt. So maybe let's jump into what that adaptation might be from a local investor's point of view. So my opinion on this is, if you are already an existing real estate investor and you are, that's where you get most of your income, that's where you get most of your business right now, is whatever you were doing that is still working, that the fundamentals of it still apply, double down on it. Absolutely right now, buy and hold real estate, cash flowing markets, even if they may be depressed from the overall arching nature of this pandemic, still is part of the safest place to be. Would you rather be in real estate right now, or would you rather be in the stock market? Now, it might make sense to buy into the stock market right now. If you have cash on the side, that might make sense. But before this happened, not knowing what was going to happen, where would you have rather been? I think personally, I'd rather be in real estate because it has cash flows. I have this anti-levering effect of having people who are still supposed to pay, and my underlying asset didn't actually go down that much. Not my dividend may go down some over the next 3 or 4 months. So if you're already good at something, double down. However, things like flipping don't make as much sense right now, because flipping is so much based on the future value of a property, and we don't know just what the effect's going to be. So I would switch back to kind of the fundamentals of buy and hold real estate. That makes more sense to me in this kind of economic climate. If you're in Airbnbs, you might be potentially hit by that. Now, the alternative to that is traveling nurses. That's where I would switch, is looking for traveling nurses. Secondly, they're actually asking for Airbnb to step in and help provide private housing for people who are on the front lines, because they need to go back to a place that is clean and secure, and they don't have like their parents that are older there that they may be caring for, and there's more and more people who need a place to go that can be clean. So there might be an opportunity in Airbnb still. This is no details on this yet, but they're already asking for this and looking and doing this in New York City, and they're doing it in Europe already with Airbnb. They're doing experiments right now in Airbnb with it. So keep your ears to the ground on the Airbnb front. If you're not already in Airbnb and you're just doing long-term rentals, I would say continue to keep doing long-term rentals.
Hey, Paul, we got some questions here. Mark, we got the CDN. Should we convert back to the CDN or wait or reinvest?
So the Canadian dollar you're talking about? So you're saying your conversion rate now just dropped a lot from 33 to 45%. Oh, it went up from 33 to 45%. So it costs you more to buy back a dollar right now. And you're asking what to do with the current dollars you have versus the Canadian dollars? I'm
That's
not
what it
sure.
seems to me. Yeah.
Yeah. Am I better? Correct. Am I better to convert back? I don't think I would do anything right now real quickly unless you are in the game of playing this business, which I know you personally, and I know that's not kind of your necessarily your focus. I wouldn't do anything right now real quickly, um, because there's just too many factors at play, and I don't know what the Canadian policies are right now compared to the U.S. policies. The U.S. policies right now are going to deflate the value, or basically in inflation. They're going to the value of each dollar is going to be a little bit less, but I'm not sure I would make a decision primarily based on that, based on just what's available now, without some sort of larger research on the topic.
Also, how do you deal with your state passing no eviction law and the tenants kind of taking advantage of that?
Oh, perfect. So the one thing we didn't talk about was our policy. So rent is due. Here's the community resources. Waive late fees for people who are having legitimate trouble. And then if for some reason a tenant legitimately can't pay, they have to require documentation proving it, and that then you will work with them. But if they can't prove documentation, like they have lost their income, they've filed for unemployment, they have some other documentation, some sort of affidavit that says that I am having trouble because of COVID-19, then you might work with them. You're not going to be able to get evictions through right now with probably any state. I'm not even sure if foreclosures are going to go through right now. So we'll talk about the bank situation shortly. But from an eviction point of view, you're going to have to figure out a way to work with people. And I don't know about you guys, but I've never personally done an eviction. I've always been able to find a way to figure it out, even if it's just taking partial payments for a while until people can get back on their feet. I'm typically not happy about doing that, but you don't have an alternative right now. So if someone wants to take advantage of you, then I think this is where you go back to your required documentation, and take note if they don't pay and don't provide documentation, that you will take legal action on them when it's available, because it will become available again. And if you feel like someone's taking advantage of you, it's time to have some really frank, civil but frank conversations with people about, if you really have problems, then we'll find a way to work through this. But if you're just trying to take advantage of the fact that you think there's no eviction coming, it's only going to last for so long.
Yeah, that's a good point.
Okay. Any other questions we want to cover before moving on?
One thing that I wanted to bring up was the macroeconomics of what's going on, like what the Federal Reserve has done. And then we were talking earlier, Paul, you brought up a good point about the quantitative easing and what the government did back in 2008.
Mm-hmm.
Quantitative easing and the what it causes to the value of the dollar, it decreases that value and causes inflation. So because things are still so uncertain, and they've only injected, I say only, 700 billion that we know of as of now. How much more to come, I don't know, but the way that has an economic impact on our value of the dollar, it could be substantial. Just depends on how much money they inject. So I want to put it out there that the value of the dollar is going down.
Yeah, which that happens anyway with just normal inflation. And I think he's talking about is the $700 billion. It hasn't formally been released, but they announced it like on this week, I believe, that there's be a QE4, they call it, quantitative easing round 4, is going to be for $700 billion. And to put that in perspective, the QE 1, 2, and 3 from 2008, or the result of 2008, were somewhere in the order of almost $5 trillion. So it is still a small fraction of what was done during 2008. And some economists actually believe it's a good thing for our economy to help keep credit markets open. And that's the big thing here that we're most worried about, is there is not a fundamental financial crisis caused, or that caused this decline. It is something external to the financial markets, and they're basically creating a more liquid financial market to make sure they stay open. That's the big concern that they're worried about, is the credit crisis resurfacing for some reason. So, but there are no drivers that would say that the banks won't lend money anymore, and that's pretty much where our economy is based off of, is the ability for us to have access to credit so we can do transactions. And as so long as those three fundamentals are in place, there's a buyer and a seller for a product, and access to credit to make those transactions happen, our economy still tends to churn on. And that's what the quantitative easing efforts are for, to make sure credit markets stay open. And so long as that happens, then I think we weather this once the economy gets back on its feet, after we're able to get back to work and get back to school and get back to our routine.
So we have a really good question here. That's a real estate market shift to a buyer market. Would this be an ideal time for a real estate investor or a first-time investor to enter?
Love that question. Love that question. So the answer is yes, if you have a good financial situation now. If you are putting your last dollar, last $10,000, last $50,000, whatever it is, into a real estate investment right now, that's not what I would advise. But if you have capital on the side that you don't need to pay your bills, to get your groceries, pay your own mortgage, and you have capital to invest that's sitting on the sideline in cash, that is the perfect scenario to be in right now. Is you haven't lost any depreciation or devaluation from your assets because of a credit crash or from a market crash. You have capital that's sitting in cash. Now's the time to put that cash to work in something that has fundamentals that still make sense, which I think makes sense in real estate that has cash flowing potential. It's the safest investment that I know, because even if you, especially when you're buying these properties at a discount, that's the big distinction that we all do in our business, is we're constantly looking for a discount. Now, what we're looking for is a little bit deeper discount than usual, because I think that that will be available now. We're not trying to cut thin margins right now. We're trying to find like that fastball that comes right down the middle, and we're swinging for the fences. That's when it makes sense right now as an investor. So long if you've done your homework and you have cash, that you're not going to lose your house if it doesn't make sense for you, or if the investment doesn't work out. All investment has risk, but if it doesn't go perfectly, then you can still weather the storm or over the next 3 to 6 months. Or if that investment doesn't perform the way you want it to, you can still weather it.
So essentially, you're really just saying stick to the fundamentals, because we're still looking, we still got to buy on our criteria. There's just going to be more deals that pop up. It's going to come down the middle, like you said.
Yeah, I think the MLS market, for example, properties that are on the MLS, there's going to be a lot more sellers that are a lot more motivated than what we had just 2 weeks ago, for sure. And that you may not see that for another 6 weeks, because it'll take people a time to kind of wait this thing out and just see how long things are really going. But once kind of reality sets in and they're sitting on these houses that there's really a need to sell, and they see that they're not moving the way they wanted to, there's a much higher likelihood of there being properties you can buy off the MLS for a discount that you weren't able to before.
And real quick here, how do you feel like the financing options will change from a hard money lender standpoint?
So I'm not sure about hard money. I don't really use a lot of hard money, so I don't really have a good comparison. But overall, access to capital will be potentially easier from the public sources, or from what do we call it, the banks. They will be more available because there's so much more of this stimulus going on that's trying to give reason for the credit markets to stay open. And so long as that works, then you'll see that the credit, the interest rates will settle down after the initial rush of the announcement from the Fed, and then you'll be able to have access. But what you will find, though, is the process to request it is going to slow down for a while, because it's taking longer to do transactions because of the flood. All these refinances are coming in. Furthermore, the ability to do transactions are a little bit harder now, because title companies may not be open, or if they are, they're just slower. Like I actually heard a story about someone doing a transaction underneath the garage door because they didn't want to be in the same room together. So they went and like had a desk outside and they had somebody inside the garage of the house and they were passing papers underneath the underneath the garage door. So little things like that are just, everything's going to take longer than you're used to. I know I've already seen that. I've had deals that have delayed in closing simply that we were in the middle of already because we're having trouble getting through the title companies are slammed with work right now. Great. Mark said he liked my answer, so I hope it was good.
One thing that I was thinking about was for someone who is requesting private money, and perhaps even hard money, would those criteria become a little more strict from a lending standpoint, or maybe
I think they
will
will.
interest rate go up?
Interest rates interest rates will effectively go down if this continues to last. But I do think that the criteria from a hard money lender, for example, or from any kind of institutional money is going to be stricter because they're going to be careful right now. Banks don't take risks easily. And so they're going to be just a little more strenuous with their underwriting for the short term. Maybe 6 months from now, maybe not so much. We don't know, but for the next 3 months, I would say for sure. I mean, I've already seen it. I mean, I've already asked, what are your policies right now? And they said, well, we're trying to figure them out. We'll just hold off before you ask any questions.
One thing that Chris and I are dealing with right now is filling up vacant units. And that's something that we've been trying to fiddle with and play with to see how to best, we just have one vacant right now, but if you have 10, how are you going to get tenants in there with no jobs?
Well, that's a good point. That's a good point. So we talked a little bit about the current tenants and getting them to pay, but if you have existing properties that are vacant that you want to fill, I think my stance on that is that you don't lower your criteria because you don't want to just get somebody in there who says they can pay and then not be able to evict them for a while. So you want to be really careful about who you place in there. I'd rather have a vacant property than a really bad tenant. A bad tenant will actually cost you more over time because they're not going to pay you anyway, and then they're going to cause damage, and then you can't get them out.
So what do you think about doing Section 8 then and having that government-backed, guaranteed rent money and going that route?
Prior to this, I was a little bit reluctant to get involved with Section 8 housing just because of the overhead required to get qualified and kind of deal with the government. But I've recently hired a property manager who kind of has their heads around that process. And just by happenstance, I have 2 Section 8 housing vouchers now, and they're probably my favorite tenants because they're going to pay. I know they're going to pay. Right now, a lot of times they have to pay a small portion themselves, and it's usually like 5 or 10% of the entire rent. But I'm still getting 90% from the government, 85, 90% from the government, and the part that they pay, they may or may not be able to pay given their circumstances, but I can survive off of 90% of the pay versus the 10% they can't pay. So yeah, I think if you have a property that's vacant and you have a housing voucher applicant, and you haven't done it before, that this would be a good time to get involved into Section 8 housing simply because it is a more secure source of income.
Hey, Paul.
Looks like we have some. Oh yeah, go ahead, Josh.
I have a question, Paul.
Yeah.
So I'm in Pennsylvania, which is one of the more harder hit states at the current time.
Yep.
How would you deal with the situation of, you were talking about title companies earlier being backed up. Right now, we're essentially closing all non-essential businesses. And so there's a lot of speculation about where settlement falls and all of that with title companies. So my question for you is just knowing that coming down the pipeline, how would you deal with that if you, let's say you have a couple deals that may be close here?
Well, if the deal is under contract and the title companies are closed, you can't close them. Mm-hmm. So, I mean, they're going to make the decision for you, most likely. But if you can go ahead and close it while the title companies are still open and it makes sense for you to make the investment, then I would still do it. But only based on the fundamentals of the deal itself, not on the title companies being open or not. I've read about this, about whether or not title companies will be stay open or not. And if they're not going to stay open, and depending on your state, it might be a different determination. Then you just can't do a transaction without a title company. I mean, you still need the title searches done. The issue that we've heard about here locally is not necessarily the title companies being open, but the recording not being able to be happening. You can't record the deed until later. So the counties might be closed, but the title companies will stay open. I cannot see a place where title companies stay closed and close down all real estate transactions for any extended amount of time. That will not sustain itself for very long. I hope, maybe I'm wrong. You never know until you see it. And that would be an unsustainable situation. People want to be able to buy a house. I mean, our economy is based on people being able to buy houses. So there's this interesting dynamic that the government's having to figure out, is the relationship between public health and keeping the economy going. And we're all trying to just figure out what actually is essential. One of the issues that was that I read about that was concerned me all of a sudden was that Home Depot and Lowe's, would they be considered essential or not? And we called the local Home Depot, and they said that they actually are considered essential, and that they will stay open. So that made me feel better about getting materials.
Anything. So in our state now, it was supposed to be enacted on Thursday night, and now it's extended to Monday. Lowe's, Home Depot, like your paint stores, anything that's considered home improvement services are open. The other issue we're running into is construction crews. So if they're a licensed construction crew, they're now shut down effectively Monday. But if you are a handyman service, let's say you're just like a general contractor, handyman, and whatever, you do not fall underneath that purview. So there is ways to still get work done, even if they did shut everything down for 2 weeks.
Just not licensed work.
Right. Well, but yeah, correct. So that handyman may have his license, but it's the companies themselves.
Right.
So I forget what the legislation is, but the stores will be open on that end. But as far as work, I have a project pause right now because the company basically said, well, we can't do anything except for an emergency.
Right. And so it's a really good point. It still makes sense to find buy and hold properties, or to run your existing buy and hold properties. Flipping right now is not a good business to be in. That is for so many reasons that would be tough. Can you imagine if they made it so that you couldn't buy or transact a property and you were a flipper? I mean, you couldn't do. I mean, you would be completely shut down. That is not a scenario that's going to last for long. If it does, it will be a very short and extreme period, is what I would suspect.
And I know we have some flippers in here. I know Al Franks, I see him. I'm not sure if he's on here listening, but if you would, type in your question or just come on the mic and see how you feel about flipping, because he's a big flipper here in the Central Arkansas market, and just kind of want to hear his stance on that.
Yeah, if he's he probably can't come on the mic, but if he wants to put a question in, he can. He may not be there.
Andrew's question is, in case of recession, is the rental market going to get stronger than normal or weaker?
In a recessionary time, the rental market does tend to get stronger because there's no new properties being built and people still need a place to live. And so it's easier to find renters, but your overall income may actually go down because people can pay less, in general. So it depends on how you define it as being stronger. So I think that, yes, you will be able to get good tenants easier because because we know that there's already a shortage of affordable housing everywhere, and that there are still more people around that then there are affordable housing to get into. So the economic driver is that makes it desirable for landlords. However, your rent that you would get on average per unit may be suppressed because incomes are down, because fundamentally rents are determined based on the available incomes of an area. So Al made a comment. The only issue they've seen is constrained material. And you're looking at options with ones we have listed on MLS. Yeah. Yeah. So it's going to be a fluid situation. I mean, there's no kind of clear answers. There's a lot of things the governments and whatnot are working on. Overall, I think the opportunity in this, and not that I'm necessarily trying to be opportunistic, but it is an opportunity in that we're in a business of buying low and selling high, and it's going to be hard to sell high for a while, but it's going to be easier to buy low. So being able to buy low is what we want fundamentally so if you are in a position of financial strength, then you could absolutely have opportunity here. And I think what's going to open up more so than anything else is using creative financing, such as buying subject to the existing mortgage and buying owner financing, using owner financing. And if you're not already aware of those two strategies, I would say go study those right now, because that will be a huge opportunity for you in the market. Sub 2 is huge after 2008. It's going to be huge now, because there are going to be a lot of people who really need to sell their house, but or are having trouble making their mortgage payments, and you can step in and make their mortgage payments for them, take title of the property, and have a good property, have a good fundamental investment that you can get for cheap financing without having to qualify for the loan yourself. Never let a good crisis go to waste. We used to say that all the time in the corporate world. Anytime there was something that happened, there was always some sort of silver lining. And the silver lining here is that prices, for at least for a short while, will be reduced, and a lot of our competition are going to head for the hills. And now it's time to take advantage of of not people, but take advantage of the situation and help people who truly need to sell their house. There's going to be a lot of people who need to sell their house. And one of the things that Chris was talking about earlier, he's our primary sales guy, is if you have a list of people that you've been following up with, now's the time to follow up again. Like the world changed in the last 2 weeks. Now it's time to put them back on your list to follow up with. Call them up and see what's changed in their life. Just check in with them and see if the offer that you made before that didn't work for them may work now.
So what do you feel about what the higher home values, like what Al said, on the 400,000 to 600,000 as retail?
So in our area, Al, that would be the luxury area, and I would stay away from that as far as buying it for flips. That's not a luxury in every area, but wherever you are, the luxury area, several orders of magnitude above the mean of the area, I would not get into that right now. That's always the first thing that goes in any kind of recession, and it's there's going to be less buyers, so it's a more sensitive market than being closer to the mean.
Yeah, he's already up there. He's just looking to move them.
Yeah,
trying to sell them
now.
Mm-hmm.
Yeah, you may have to take a reduction over time. I mean, hopefully you may still make money on them, but I'm not sure. We're trying to think of strategies or techniques you could do to, if you're not already staging them, you probably are. You can stage them. You can virtually stage them. All the tips and tricks that you probably already know about being a good flipper, having really good pictures, and being open to if you can afford it, offering to sell it on terms, at least for part of it anyway. That might help.
And one thing that may even stimulate more offers is listing it very close to the retail value.
Instead of going above.
Going above.
Yeah. List it for the amount that you really need to take for it. Yeah,
it may stimulate like a bid situation where.
But there will still be buyers, long as the title companies are open and allow transactions to happen. Then there will still be buyers. People still need to find a place to live. I mean, they still got to live their lives, and until the social distancing requirements protocols are reduced, our economy is just going to be slower than what we're used to. So it'll sit on the market longer than it has in the past, I suspect. Yeah, he says I definitely wouldn't buy a new one now. Yeah, not for a high end flip. That's not the market for it right now. Well, this is a really good example of why to be in a good financial position when you're doing these kind of transactions. don't spend your last dollar on your last investment, right? Okay, we're 45 minutes into it. We'll go for at least an hour, if not longer, if you guys would like. I want to talk a little bit more about where the opportunity is in this market. So we've talked a lot about weathering the market so far, but what to be looking for as the social protocols are. I mean, I'm not talking about today or tomorrow. I'm talking about over the next 2 or 3 months. What could you be doing to set yourself up to come out of this in a better position than when you were before? Make sure you have access to your capital. And then if you don't already understand sub 2 and creative financing, owner financing, jump all over that right now. And then right now, I would say go and talk to your end buyers that you're wholesaling, figure out what their appetite is for buying. So to make sure that when you're wholesaling, that your end buyers are ready to go. Because there will be people who are well capitalized who will take this as an opportunity to jump on a bunch of properties. We're looking at lots of properties right now because we want to jump on really good deals because we know this is the time. And so a lot of the questions that I've been getting, they're well intended, and people will reach out to me and they're asking, they'll ask a lot about why is this happening, and they're kind of, and there's just like an underlying worry in the question. And instead, I would say the better way is to kind of ask the question beyond the question, which is kind of, how am I going to solve for this? And to understand that right now, being willing to hustle and being willing to be creative is your opportunity to anytime there's a shift in a market, opportunities are created that people are slow to pick up on. And now's the time for us to do that. Traveling nurses right now, I mean, might be the best market ever to get into because there's going to be a need for that for at least 18 months because this is going to be probably an 18-month deal where there are these waves of people who are contracting the virus or coming into hospitals. So they all will need a place to survive, to live, and to take care of business. And converting your Airbnbs or existing houses to traveling nurses might be a fantastic. I know Jeremiah, who was on here at least earlier. I know he's done that some, and he says he just rented a place for $1,700 a month for at least 3 months, and had another one reach out the other day. So he's already in place to do this on a couple of his units. So it's pretty similar to running an Airbnb, except for the transactions or the stays are longer.
And that may be something for Al to look in as higher end place to just pay the bill to front the cost right now.
Yeah, if you can't move a property, then what else? What are the alternative uses for that property that could be valuable? I don't know if the traveling nurse deal does it by the bed or by the house, but if it's a big house, you might be able to do it by the bed. I haven't done that personally, but that would be an interesting situation because they might be able to be into a really nice house, and especially if it's located near a hospital. That might be really valuable.
They do by room or house.
A room or house, depends on the nurse. That would be something I would look into.
We also put nurses too. So maybe if more than one lives there,
yeah,
in a larger home, you could perhaps
or what their desire is, right? Or what their company will pay for, right? Part of it. Yeah. I think that's a good opportunity for sure. What other questions do we have about the opportunity in the marketplace?
Well, I think as far as the strategy goes, there might be a better opportunity to do this option. It requires very little money invested, and there might be still people who still need to sell their house at a certain price. So I'm seeing probably this option might be a opportunity for us to get in.
Yeah, both on the buy and the sell side, because if you cannot hey, this is a deal for you, Josh. If you can't do a closing, you can still do a lease option. You wouldn't be able to get it notarized, but you can still do the paperwork. And I mean, I'm sure, I wonder if you can get a traveling notary to do it for you. But the point is that you set up a transaction where it's a lease with an option to buy, and that option would be what they would normally pay for it now. And then you're actually just still able to do a transaction without having to rely on a facilitator of the transaction. All you got to do is meet and sign papers, or e-sign the whole thing. Just make sure we use HelloSign and e-sign the whole thing, and it's a legal transaction, and you can do it all remote potentially, based on pictures and just look at using a lockbox. That might be one way of dealing with that's a good point, Andrew. That's a transaction you can do without relying on an attorney or a title company. So do you do lease options, like you buy on lease options, or do you sell on lease options?
I do both, but for buying side, I only have one. Then I have lease option because of certain situation.
Yeah.
The seller cannot sell just yet.
Mm-hmm.
So they cannot sell this certain situation.
Yeah.
Constraints.
Could there ever be
Yeah.
a situation where the seller just couldn't sell quite yet, but they still were really willing for you to lease the property? That's right now, right?
Yeah,
Holy smokes!
exactly. Mm-hmm.
Yeah.
Yeah.
A lot of people use a master leasing to run Airbnbs. So that might be a scenario to do a master lease with somebody to where you can lease it from them and then sublet it to just a normal long-term tenant. Because I still think there's going to be desire for people to move into properties so long as they have incomes, and there are still going to be people with incomes. So um, there's still going to be opportunity to do a transaction within the next 3 months. And then once things settle out, I keep saying 3 months. I don't know if that's the magic number, but let's say it is. When things kind of start to pick back up, then you can go ahead and let them exercise that option. Really good point. So I think your work ethic and your ability to think through a problem and kind of keep your emotions at bay and use your higher level thinking really is going to be our biggest strategic advantage in whatever market that you're in, because most people are going to be completely gripped by fear and uncertainty. And if you can step in and say, well, I'm certain that this is how we can do this transaction, and I can offer a solution to your problem at a deeper discount than I used to, then there might be some really big opportunities over the next 6-12 months.
I think they're going to come up. I mean, if you just stick to the fundamentals, like we said earlier, there's going to be a separation of the new people who don't have access to capital versus the ones that do.
Mm-hmm.
So if you can just keep those people in your pocket and keep them at bay.
I'm glad you mentioned the access to capital there. So, Cody, if I came to you and said, hey, you have $100,000 and you want to invest it, would you rather invest? I have 4 options for you. You can invest in the stock market. You can invest in the Mona Lisa. You can invest in a flip property, or you can invest in a buy and hold rental property. Which of those 4 would you choose?
I mean, I think it's pretty common sense right now.
Well, and I know I kind of set that up for a obvious answer, but for all you listening to this, which of those would you actually do? I mean, rare art or the stock market or
even minerals and stuff.
Yeah, exactly. I like cash flow, and I like consistent, reliable cash flow from a market that has the underlying fundamentals. And
So
go ahead.
Let me ask you this: if you do like cash flow, what do you see? Because we're still buying property, but the tenants don't have jobs to pay, so we're basically buying empty property.
And that's true of any time that we're buying property that's already currently vacant. But sometimes you buy properties with tenants in place, and you can vet the tenants before you buy it. That's one option. The other option is that if you're doing some sort of rehab, if you're capable of doing the rehab yourself, you might be able to make some money on the rehab. And I say rehab as in repairs for a rental. So you may be able to use your own labor. If you can't find somebody else's and you like doing it, that might be a time to actually do your own labor. And third of all, there might be high unemployment, but it's not like the entire country is not going to have employment. There are still a lot of people who are working on Zoom, just like the technology we're using now, running their jobs as usual. And you can always vet who the potential tenant is before you let them in, make sure they have proof of income. And if they have proof of income, they're a good tenant. You can also check out to see if they have any vouchers. So that's something you could do beforehand. Or as Andrew so adroitly pointed out, you could do lease options. So you're never taking title of the property. You can just do a lease and then sublease it to somebody else.
So what rates do you currently give your private investors, and are you positioning that to favor one way or another?
I usually have a personal conversation with the private lender to see what it is that makes sense for them. It's usually somewhere between the range of 8 and 12% in my world. That actually might go down some. Generally speaking, it might drop a point because the underlying factors are such that the money needs more safety right now. People want yield. I have a few investors who will accept 6% before the thing happened, and they're thrilled that 6% is what they're getting, because that's nothing close to what they're getting in other markets. Not every private lender makes sense for them. Sometimes it's 10%. For the right deal, 10% makes sense for me.
And one other thing I'll add to, just on the premise of buying property and holding it, is we mentioned earlier Section 8 or housing. There will be subsidies or some form of way that someone will make a payment, and everyone needs a place to live, so people will be innovative to find a way to make it work. It all depends on the class too in which you're buying property. Are you buying an A-class property? You're buying a C-class,
And what's crazy is during a recession, the more sensitive class to having rents drop with more rent compression is the A class. The higher the class, the more rent compression there tends to be. In the middle income, low income classes, there tends to be less income compression, because it kind of makes sense. If you're having trouble financially, you're going to go to a little bit lower grade house. And so there tends to be more demand for just affordable housing of any type. So if you have a property that's in good shape and is rented at a reasonable market rate, I don't think you're going to have trouble finding somebody who's interested in it. And if they have a voucher, all the better.
So from all this, it seems like, still be buying, but stick to your fundamentals. There's going to be more opportunities that come up. You just have to make sure that you can weather the storm for a couple of months if there's any forbearance or anything like that nature.
Yeah, and let's talk about forbearance for a second. If you have properties that are that currently have mortgages on them, I would reach out to your banks and ask them about what their current policy is. I got a friend of mine who sent me a letter that he got from First Bank of Arkansas, I believe, and they proactively sent him a letter saying that if you're being affected by COVID-19 and are unable to make payments, they will allow 3 months of forbearance where you're not having to make your payment, your principal payment. You do have to pay, but interest will accrue. So no payment, interest continues to accrue, but no late payments. So basically, you just say, I want to apply for it. There is a process, which I haven't tested, but there is a process, and you get qualified, then you have to make your payments for 3 months. Which I think makes a lot of sense. And I think you'll see a lot more of that being open. That may even be mandated by the government, that mortgages of certain qualifications will allow for a forbearance period without penalty. So there's just going to be this 3 month period. I keep saying 3, it could be 2, it could be 10, of the government doing their best to bolster up the economy, to just let this thing kind of play out while we're all practicing social distancing.
And one of the things I think also will happen is, we're practicing social distance right now. And then I do believe that once they say, okay, now it's safe for you to go out, you're going to have an influx of people going out and then causing another outburst.
There'd be a resurgence. Yeah. I think there's going to be waves of it. I think it's going to be several waves until it kind of makes its way through about 40 to 55 or 65% of the population worldwide. Yeah, and that's going to happen for the next 6 to 12 months, maybe 18 months to 2 years. I think there's going to be rounds and rounds of this. Each round will be less because more and more people will have already had the virus. But we're just trying to keep it all. The number of people needing care are within our hospital's ability to care for everybody, and that's what we're all trying to manage. Otherwise, the death rate goes up significantly and goes from 1 to 2% to 6 or 7%, maybe 10% in some cases. Like in Italy, they've had as high as 10% because they got slammed hard.
Wow.
Yeah, so I think in conclusion, what I would say to everybody is, this is unprecedented times, and so the best way to help everybody is to continue to practice all these, social distancing protocols that we've all been taught. And the best thing you have to do for people is stay inside, stay home, take care of your family, and do the best you can given the circumstances. So I appreciate everybody's time and attention. If you liked this, let me know. If you, there will be a recording of this available to you afterwards. You'll get an email from me that shows where you can go to get the recording if you want to hear bits and pieces of it, some of the resources. And thanks for all you guys attending, and we'll be catching up with you soon. Good night.
Thanks, guys. Talk to you guys later.
Bye.